not like ThinkBack. Okay, if I go to, and I'm not, this is not going to work on demand. ThinkBack lets you put in a little simulated trade and see how it performs over time. See how it says think on demand coming soon? It doesn't work here yet. We can go back on, let's just shut off on demand now. I can go to ThinkBack and say Google. And let's see, let's uncheck spiders, delete all back trades, it's fine. I can go and look at, let's sell that March straddle. Right click, sell, Strangle. This trade is going to show on ThinkBack. This is the P&L of that line, of the P&L that position. I can advance the date here on ThinkBack, P&L date. We put it on November 13th. I can advance that date and see the P&L change. Okay. Hey, look, I'm up $7,300. Great. Why? Because I know the stock didn't move that much in between. ThinkBack lets you, on live trading or paper money, lets you enter a trade and see how it's performed over time without, as you said, hitting your account. Okay? So there are a lot of little, and Matthew, one of the useful things about these sessions that you set up is no matter how many times you log into Thinkorswim, no matter how many years you've been with us, there's always something new to know. We're going to do the New York Traders Expo in the next few days, and folks will come up and, people have been with us for years. They always stop by and say hello, and maybe they have a question about a trade, and we have the two big, if anyone has come to see us at the trade shows, we have two big screens by the booth, and so we'll show them on the software, and they say, wait a second, how'd you do that? And we'll click, 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 and we show them how to do it. And they say, well, gosh, I didn't know that. When did you add that? And, well, I don't know, 3 years ago? And you don't want to make people feel bad about it. But seeing the platform being used by not only just myself, but other people shows you different aspects that maybe you don't know about. So the question was, well, can I test a trade out without having it hit my P&L or change it? That's ThinkBack. That's ThinkBack. And ThinkBack works on live trading, and it works on paper money, not yet on demand. On demand, it doesn't really fit the use case for on demand, So, all right. But one of the things, Matthew, I know you're a probability of success type of trader. Oh, any more questions? Go ahead.
Yeah. Or we can leave until the end. What would you prefer?
No, that's okay. If anything comes up right now, I'd like to make this as responsive to folks as possible. Okay. I want to explain some of the probability numbers and the differences in the probability numbers, because those are always kind of a bugaboo for people. But if anything's related to on-demand or ThinkBack, I'd be happy to answer them right now.
Okay, I've got two questions, and one is, how about the Analyze tab and the Risk Graph for Think on Demand?
Not yet. That's something that we just haven't gotten around to building yet. We've been working on Think on Demand since last August, and when we released it in December, we wanted to get it out in 2009. It worked for the most part, but it was a little slow, even slower than what we saw this morning. And we knew of all the things that we wanted to add, like like I said, the ThinkBack, the Analyze page, Market Watch News. We just haven't gotten around to them yet. So what I'd suggest is the workaround is that you can enter, if you don't understand what the position looks like graphically, if you want to see the P&L line, let's say for a short straddle in Google, okay, short strangle, I would simply enter a similar trade for now and say, okay, Google is at 533, so let's do the the 50-30 or the 50-20 strangle, sell, strangle, and 50-20, and then look at the risk profile, and okay, that's what it looks like. It looks like I make money if the stock doesn't move, and I lose money in a big move either way. Okay, so you kind of keep in mind that a lot of these positive time decay, defined risk, this is not defined risk, let's make that clear, okay? You can get slaughtered in a short strangle in Google or any stock for that matter. But these sorts of trades all have roughly the same shape. They make money if the stock doesn't move very much, and usually lose money when the stock moves too much in either direction. As long as you have that visual in mind, you can take that from the Analyze page, go then to ThinkBack, go to On-Demand and say, all right, if I enter a short straddle on this day, or a long butterfly on this day, or a short iron condor, or a calendar spread, then I kind of know where the stock needs to be for me to make money. Keep in mind, again, the old rule of thumb is, where do you want the stock to be at expiration? At your short strike price. That works for a short straddle, works for a short strangle, works for a calendar spread, works for a butterfly, even works for a vertical, a short vertical when you think about it. Okay, you want the stock to be at the short strike price. So whether you're using the Analyze page or ThinkBack or On-Demand, keep that in mind. And it's going to, until we actually get the feature built, it's going to give you good practice in thinking about positions in a very in a little bit more intuitive way. Okay, so I can, for example, I always use I always say I can look at anybody's position and tell pretty quickly within a few seconds where they make money and where they lose money. I was talking to a client yesterday, and he had a huge position on a bunch of stocks, a lot of options positions all over the place, and I said, well, I'm confused about it. Well, how do I know where I'm making lose money? I said, well, you make money right around here, a little bit higher than here where the stock is. That's where your concentration of short options are. He said, well, what does that mean? I said, well, when it rallies up to the short option, okay, that's where your time decay is maximized, and you've got some long back month premium. Though that extrinsic value is going to be maximized when the stock rallies to that strike. So knowing that you want the stock to go to your short strike at expiration is going to help you understand things a little bit more intuitively. Like I said, the graphs are great, and we are going to build the Analyze page functionality, going to integrate it more into ThinkBack and On-Demand and all that stuff. But until that time, use that, try to use some of the intuition to understand how these trades work.